Jumping over to the vol side of things. So realized vol jumping around 10 to 15 points across the two big caps. Obviously, we're getting the SEC actions really driving the news flow there and the various liquidations that it's triggered out of alts. That's really creating the movement. Implied vols didn't necessarily react quite as much instantly than realized did. Because obviously only a big 4 or 5% drop and bounce. But you saw after the weekend, implieds have rallied quite hard to really catch up to realized. That's taken carry from negative, where it was pretty much all of last week, back to neutral as that implied has caught up. There's lots of potential for news flow this week, so it makes sense that implieds would catch a bit of a bid. So we don't really see vols doing too much until the end of the week on Friday. After the weekly expiry, they might find some offers again from the more systematic sellers. But, given everything that's potentially going to hit the tape this week, we would expect vols to stay fairly pumped for most of the week. Systematic call selling has been keeping a lid on short-dated vol for months now. If markets were to break below those key supports that I've mentioned, as the alts have obviously already done, then we may enter a new vol regime, one that we have not seen for quite some time. We've been in a low vol regime in crypto for a while. That could easily change if these key weekly support levels are broken. All right, looking at term structure. So we see both term structures are flipped into inverted. So a decent pop there on both assets. Back-end vols, though, on ETH haven't done much. Bitcoin and ETH, back-end vols not really where it's reacting. So 6 months and out, not doing much. All the reaction really coming in the front end because it's gamma that people want, right? Gamma is what gives us exposure to realized vol, and gamma is in the front end of the curve, which is why the weekly vol has re-rated by more than 10 vol points. And that's why that front end has gone up, okay? The ETH Bitcoin spread, though, is still trading pretty flat around 1 vol. ETH over, even though the realized is around -1. Now, it does make sense, though, that you would still have a small margin of premium for ETH, just because the market thinking that, ETH, even though it's not realizing now, if we were to break down 1700, then that is looking weaker from a spot perspective. So traders still a little bit nervous that ETH could come alive on the downside, and that's keeping a bid to Ethereum vol above Bitcoin vol, even though the current realized metrics are not justifying that premium. If we look at SKEW, with crypto markets under pressure, weekly supports under attack, it does stand to reason that SKEW should be moving deeper into a put premium across the board. That is what we're seeing. Looking at Bitcoin, weekly SKEW has got to 6 vols for puts, and then it steadily does tail off, and as we go further out the curve, and then we get back to a call premium in the 6-month bucket and beyond. So that halving cycle is clearly still in the options market's mind, and so for anything longer dated, let's call it September, December, March next year, because people believe the halving cycle is going to be an important dynamic, there still is a bit of a call bid out there. Unlike Ethereum vol, Ethereum put SKEW is trading at a significant premium to Bitcoin. The front end has reached as high as 9 vols for puts. It does taper off similar to Bitcoin, but it holds a premium. So in the 3-month part of the curve, it's still about 4 vols for puts. And even in the long end of the curve, it's very marginally still for puts. So that is the divergence that we've seen for some time now, and it still persists. The disproportionate amount of call selling flow that we've seen on Ethereum, we think is one of the big drivers for that SKEW consistently being above Bitcoin from a put perspective, because that risk reversal, that upside of that risk reversal is being pressured by that flow that we're seeing in Ethereum call selling that doesn't seem to go away. And then we do agree that ETH will have a higher beta on the downside. It won't get a flight to safety, which is another reason why the put should have more of a premium. So for me, the crypto options market is certainly increasing the odds that these near terms, these support levels, these weekly supports may not hold this time. They've obviously held for the last few months, but the way the SKEW is exploding suggests that the market's a bit more fearful this time that these levels might be breached. So that's something you can take away from the options market pricing that we're seeing. Looking at our strategy compass, clearly spot on the lower end of the range. Vol still, Vol has bounced by a good 7 points, but it's still in buy calls. I'm not rushing to buy calls. I think there's a fairly decent risk of a downside breach here on these major support levels. So I wouldn't be in a rush to buy the dip right now. So I'm kind of sitting on the sidelines, waiting to see if that break occurs, because it wouldn't surprise me if over the summer, given the liquidity profile that we're talking about, I wouldn't be surprised to see a downside break. And then when that happens and you get your acceleration lower and you get more liquidations, that's when you want to step in with some sort of upside plays, whether it's call calendars, call spreads, call ratios, whatever it is. That's what we'll be waiting to pounce on, basically. All right, looking at flows. So Bitcoin, there was an uptick in general option flows, option volumes, notional wise, as market weakness on SEC headlines did drive more activity. Short-term gamma sellers were still around, but they got absorbed pretty easily as the buyers came in. So we saw a 16th of June strangle seller here in decent clip that got taken out as the front end vols pumped. The 30th of June calls were also bought in the 27.5, 29K strikes. Also a big call spread bought in the 30K, 31K strike. Sellers of puts in July and August taking advantage of the SKEW bid. And then we also saw some long dated calls. As we said, that call bid, that call wing still holding a premium for the long end. People buying 40K calls in December. So that was the major flows that we saw on Bitcoin. In terms of ETH, flows a bit more two-way than we have seen recently. We've realized picking up. Calendar trades are still dominating. But whilst we've seen like the June, September calendar getting sold, we did see some more of that on the June 1900 versus Sep 2100. That did trade from a sell side again, but we actually saw some buying of the June, July, and the June, August calendar on the 2000 call, on the 2000 strike. So a bit of two-way flowing calendars. Maybe some people thinking that the Vega's offering some good value again here, and they're funding some of the carry with the front end, given the inversion of the curve. That would be your reason to buy call calendars. And then finally, we did see some short-dated put protection via 23rd of June and 30th of June, puts and put spreads, strike choice being between 1650 and 1500 on the downside. Okay, so that's what we're seeing in flows. What are we seeing in dealer positioning? So Bitcoin positioning flipping to the downside. So it was positive last week. It has gone slightly negative, nothing too dramatic though. Where's that coming from? So we've got some local shorts in the very short dated expiry. So 14th, 15th, 16th of June. So this week, where we've got obviously the FOMC and various other catalysts, that's providing you some local short gamma here. On the downside though, as we run below 25K, we've got these long strikes in 30th of June that should make the dealer gamma position go more neutral, if not long. But if we rally, we're going to run into more shorts in 30th of June, which will probably take dealers even shorter. So I would say that on the way down, you'd expect this to flip higher. On the way up, you'd expect it to get shorter. So that probably means we've got fuel for a snapback higher. If we get the news flow for that, we've probably got fuel for a snapback higher. Obviously, if we break 2500, this whole profile could flip because you might induce more liquidations, which would then probably induce more put buying, and then the gammas might get, the dealers might get taken out of all of this long positioning that they've got in 30th of June. But right here, right now, that will act as a dampening force to any sell-off until that flow comes. If we look at Ethereum gamma positioning, it is still long, has been for ages. Big strike 1800, 30th of June is still providing the majority of the positioning, but we have seen a change in profile. We have seen some shorts come in on the downside down to like 1600. If the market breaks 1700, you're going to move into the vicinity of those shorts, which will probably take the gamma positioning in Ethereum down, and that will maybe make Ethereum more likely to move. So adding even more weight to the argument that Ethereum SKEW should trade at a put premium, because the gamma could run away on the downside and allow this thing more room for movement. Okay, so that's being backed up by what we're seeing on the positioning side. What have I been doing? All right, that's it for your Crypto Weekly. Hopefully you understood this croaky voice of mine and you found that useful and helpful. Otherwise, we will catch you all in a week's time. Thanks a lot.